Thank you for joining us for another market recap on Friday, November 12th. I am joined today by Jordan Youl with StoneCastle Investment Management. Thank you for joining me, Jordan.
Yeah, it's good to be back. Thanks for having me.
So it's not quadruple witching Friday, which is normally when Jordan gets to join me, but it'll be a special Friday. So thank you so much. I actually had the pleasure of seeing you in person this week, Jordan. It was so lovely to see you in 3D. So glad to finally connect again in person with you guys and to see Bruce as well. So thank you for joining me this week. We have lots that we're going to break down. We're going to talk about some TSX all-time highs. We're going to talk about market breadth, which is improving. We're going to talk about small caps again. They're on the breakout. There's a lot to break down there as well. We're going to get into all things cannabis. There's a bunch of stuff you're going to tell us about. And then, of course, we're going to end off with some CSE issuer news. And this week, CSE issuer news is all things Metaverse. I'm going to tell you what Metaverse is and all the companies that we have that are getting into that sector. So let's start off with TSX all-time highs. Tell us about that, Jordan.
Yeah, I sound like a broken record, but this week the TSX Composite Index hit another new all-time high, which is fantastic, especially as we head into a strong seasonality period. November and December are typically very strong periods of performance for the equity markets in general, but specifically the TSX and the small cap index. But as mentioned previously, we do rank the TSX on a comparative basis to other global equity markets. And the TSX is one of the top producing indices on a global scale. A lot of these commodity-rich regions, like Canada, are right at the top of the list. You can throw Saudi Arabia and Russia into the mix as well. But that really coincides with this commodity tailwind that's really taking place right now within the markets.
Very cool. Yeah, we keep saying the word all-time highs on this show, which isn't a bad thing. Okay, let's talk about market breadth. What's happening?
Yeah, so the narrative is definitely positive. When I was on the show back in August, it was definitely a concern where the percentages of stocks trading above their 50-day or even their 200-day moving average was quite small. But since then, we've seen different industry groups and other sectors participate and trend higher as the markets are hitting all-time highs. So effectively right now, about 75% of the issuers within the TSX are trading above their 50-day and 200-day moving average. So as equity investors, and especially as the markets are hitting all-time highs, we want market breadth to be robust, right? We don't want the markets to be inching higher with just a handful of issuers or just a select group of sectors driving the markets. That would typically signal that we might be in a topping pattern. That's not the case today. So market breadth is definitely improving. And I think that coincides with the fact that we have experienced a breakout in the small caps and mid caps.
75%, that's crazy.
Yeah, it's definitely positive for sure. And you can use it from a contrarian standpoint as well. Like if it's in the upper 90s, that's great. You can't use it in the context of a timing indicator. But if it got to those extreme levels, you'd probably expect some short-term pullback, right? If everyone's super optimistic in the markets and we're experiencing that extreme euphoria in the market. We're not seeing that right now, but 75 is definitely healthy.
Great. Okay, let's talk about the small cap space. Yet another conversation about the breakout. There's a bunch of stuff you're going to tell us about, so let's jump right into it. You were going to talk specifically, start off about TSX small cap. What's happened there?
Yeah, so last week, and we've been referencing this, on a frequent basis, we've been patiently waiting for the TSX small cap index and even the Russell 2000, which represents the small cap universe in the US, to break out to the upside. It's been more or less range bound since February. We experienced that last week, which is great. And as markets are hitting all-time highs, we definitely want the small caps and mid caps to participate. That also signals that we're in a risk-on market environment. But more importantly, if you take a look at the TSX small cap index over a longer term time scale, it's actually eclipsed or broken through the previous peak, which was in 2007. So it's been 14 years effectively where the TSX small cap index has been range bound. And this month it's actually broken above that previous peak in 2007. So this is a longer term trend and a longer term cycle that definitely bodes well for the junior miners and the smaller mid cap growth issuers that represent the TSX and the venture exchange as well. And we're also getting confirmation in momentum. So not only is the price rising and breaking out, the underlying momentum is getting stronger as well, and it's now positive for the first time in a long time. So that's very constructive.
Well, I also see on the CSE, I mean, we have, people might be surprised just how big our mining sector is on the CSE. It accounts for a huge part of our issuers. And I feel like when we're reviewing press releases every week for this show, I'm just seeing tons of new issuers coming to market that are in the mining and exploration space, tons of financings. Actually, there was a financing that we talked about last week, and the company keeps upping their capital raise. They keep getting oversubscribed. So we're seeing lots of financings. We're seeing lots of the big names like Sprott come into some of these financings. So it's pretty neat to watch the mining space have a nice day out there.
Yeah, absolutely. And that really coincides with the sector rotation we're experiencing right now. So, at StoneCastle, effectively, we're ranking the entire universe from 1 to, call it, 1,200, based on a lot of different factors, fundamental factors, but also technical strength, using technical analysis, and ranking them based on strength and momentum as a group. And we always have our high conviction, top of the list ideas. And then we also have what we define as up and comers, ones that are exhibiting signs of improvement from a fundamental perspective and also from a technical profile. There's not a check mark in all of the boxes, but we're definitely seeing more check marks in these boxes. And in that particular list, it's predominantly precious metals and small caps. So, that really coincides with, our macro risk assessment model, right? And we do have a chart of this proprietary tool that we have at StoneCastle, where effectively we're ranking, a variety of different factors, small caps to large caps. We're looking at different sectors, so discretionary on a comparative basis to staples. And effectively, we're ranking offensive risk on, constituents on a comparative basis to their counterparts, the defensives. And back in August, when we were on the show, the macro risk assessment model was neutral. And, there's still money to be made, when we're in a neutral market environment. Case in point, our income fund was thriving and doing well. But if you take a look at what was leading the market in August, it was predominantly large cap defensives. The small to mid caps have yet to break out, and market breadth wasn't very strong. But if we fast forward to today, the needle has definitely moved or transitioned from a neutral environment to more of a neutral offensive environment. And really what's moved the needle is stronger market breadth. We're seeing more buying power and accumulation in the small to mid caps, which we hadn't seen for several months. And then if we take a look at the high beta versus low volatility ratio, that's breaking out to the upside as well. So investor sentiment is definitely, improving as we're seeing more money flowing into the higher beta, the growthier segment of the market, whereas several months ago, it was a little bit more tilted towards large cap quality and more defensive sectors.
Very cool. And we're seeing a bit of a sector rotation now, aren't we?
Yeah, absolutely.
We continue to.
We have, the 2021 is a really good example of the significant cross currents that have taken place throughout this year. So obviously with rising inflationary pressure and commodity prices, we're seeing, the base metals and the gold miners really improve over the last couple of weeks. But what's really changed, this week is cannabis. It's a sector that has had a very challenging 9 months, but obviously with earnings being reported this week, we're seeing the cannabis stocks really starting to break out again, and we haven't seen that in quite some time. So we're really optimistic and excited about the cannabis sector right now for new investment ideas.
Well, let's talk all things cannabis then. Let's get into it. There's a bunch of stuff that you're going to tell us about the cannabis sector. So let's start with earnings and valuations. What's going on?
Yeah, so a lot of these MSOs, in particular, have reported this week. The share prices have increased by considerable margin in light of the positive news from their earnings. Valuations today are a lot more attractive and cheaper today than they were several months ago. But you can see here in the relative rotation graph, I've highlighted 5 cannabis stocks that we watch very closely. And for those of you that are unfamiliar with relative rotation graphs, there's 4 quadrants. There's improving, leading, weakening, and lagging. And you can see, a majority of these constituents are in the improving or lagging quadrant. So in other words, they have been out of favor, and the technical profiles have been quite negative, but they are starting to rotate, and they're starting to move in a north-northeast direction within the lagging and improving quadrant. Now, the relative rotation graph, how it works is typically these constituents rotate in a clockwise fashion. So from a timing perspective, it's ideal to take positions in companies when they're moving in a north-northeast direction in the improving and leading quadrant. So despite, these MSOs performing very well, intra-week, we're still at the early stages of a significantly longer runway.
Very cool. That's the first time I think that graph has been explained to me, and that makes a lot of sense. So there's potentially some good opportunity. I mean, look, the U.S. MSOs, they're pretty fantastic behemoth companies, and it's a rare opportunity for us Canadians as they list with us here in Canada and at the CSC to be able to participate with them. Okay, let's talk about tax loss selling. How is cannabis part of tax loss selling this year?
Well, it's been a top of the list candidate for tax loss selling purposes just because the underlying share prices have declined so much off their previous peak. Most of them peaked out in February or March of this year. So as an investor, when you're looking at your portfolio, you might want to look at crystallizing, these losses to offset some potential capital gains you may have elsewhere in your portfolio. But because these companies have, declined by so much on a percentage basis, from our perspective, we think, that is done already. It's already priced in. Now investors are looking at it from a valuation perspective and an opportunity set to start taking positions in these companies again, because these companies have a lot of catalysts as well. And then obviously with the potential of federal legalization coming up potentially before the midterm elections, there's a lot more catalysts and tailwind for the sector today. So that creates an opportunity as well. And Sundial is another example that came out, or an issuer that came out earlier today, had great numbers, and they just reiterated their share buyback program over the next year as well. So companies are starting to buy back stock as well with cash, and that's going to also instill confidence in the management team and the company as well. That's definitely positive when that's rolled out.
Okay, I have two questions for you. So the first one is, in a time of the year where tax loss selling, is a part of your strategy, and potentially there has been some softening in some of the shares that you hold within that sector, is it a strategy to sell it, crystallize the loss, and if you still like the company and see it has an opportunity down the road, that you buy it back at some point? Yeah. Is that a thing?
Yeah, you can, for sure, without question. And it also depends on the context of that individual investor. Especially if you have massive capital gains elsewhere, you might use that tactically in the short term to offset, a tax bill, but then buy back the stock at these levels and hopefully get a nice capital gain. But there is a deadline towards the third week of December where investors effectively have up until that date to crystallize losses and use those capital losses to offset gains for tax purposes.
Well, if you want to know more about that, then please go see a professional. This is not advice. Okay, we're going to talk about all things metaverse. I always feel nervous when we start talking about emerging sectors, especially in this space, because I'm just worried that I'm not going to say things right. So viewers out there, bear with me as I explain to you what this is. So we're going to talk about CSE issuers and all the amazing stuff that's happening with them this week. But first, I'm going to explain as best as I can what the metaverse is. So most of you might know that Facebook recently came out and they rebranded as the parent company of Meta Platforms, I believe. And what they are doing is creating this metaverse. So metaverse is a combination of multiple elements of technology, including virtual reality and video, where users live within a digital universe. I think we've had lots of examples of this over the past few decades where people believe this is going to happen. I think there was, I don't know when, but Sims World. I don't know if you remember Sims World came out quite some time ago. People have their own avatars and live in this world. But now we're really in this opportunity to actually virtually live within this world. It's an extensive online world where people interact via digital avatars. And just to give it a little boost, yesterday, Morgan Stanley came out and said, this is the next big investment theme. This is, I mean, for Morgan Stanley to come out and say this so early in the game, I think is pretty impressive. And the other thing I think that's pretty cool about this is that, it's pretty rare that investors in the small cap space have the opportunity to participate in an emerging sector, at the same time as the big guys. So Facebook is obviously developing their metaverse, but we're seeing lots of CSE issuers and lots of junior issuers come out and start to engage in the space. Either they're focused on it or they're adding the technology to their already existing platforms, which seems to me like a pretty neat opportunity for investors, wouldn't you say?
Yeah, without question. Yeah, and we've already seen this already through a lot of these gaming companies. But I think maybe Second Life is a company that's similar to the company you mentioned previously. We've already seen this through virtual reality, especially in the gaming sector, whether it's Second Life or Roblox, where you create your own avatars, or Fortnite. So the gaming stocks are definitely going to benefit from this for sure. But other industry groups and sectors are going to consider implementing this moving forward, whether it's retail, education services and whatnot. And this is a chart that was posted from Morgan Stanley, and you can see there's a variety of different industry groups and sectors that can invest and capitalize on this new growing emerging market. And it could create some synergies, and it's also going to create a lot of investment opportunities as well for investors.
I mean, that's huge. And you can only imagine how big this could go. So I just want to talk about a few things happening. We have a bunch of issuers that are getting into the metaverse land. Our plan is we will do a CSE forum on the metaverse. So stay tuned for that. We'll make sure that we promote and highlight all of our issuers that are in the space. Next Tech AR, a CSE issuer, came out and said that they are going to launch their ARitize Metaverse Studio. It enables its customers to create their own metaverse, and the studio will allow anyone to create a spatial map using the company free downloadable app. We also had our issuer Liquid Avatar. They are speaking on panels. They'll be on a main stage panel down in California talking about all things metaverse. We also have a company, XRA Applied, and they are providing kind of the picks and shovels of the space. So they're creating the backbone of the space, and they've just recently listed with us within the past year. So they're busy out there doing that. And then another company, Cloud9 Web3 Technologies, they entered the metaverse. And I thought this press release was super interesting. They signed a virtual office agreement. So think that one through for a second. Signed a virtual office service agreement with Terra Zero Technologies. This office is located across the street from Decentraland's University. It intends to use its location to provide EdTech content and materials consisting of practical and relevant guides to understanding cybersecurity, blockchain technology, and NFTs. So this is an office in the metaverse. I mean, wow. Isn't that amazing? That's so cool. I think maybe we need to build a CSE studio in the metaverse, and you and I can meet there weekly and have these chats.
I love it. Have our own little avatars, 3D, right?
We might get an audience, a live audience.
That'd be nice.
Well, listen, Jordan, I'm pretty excited about this space. Have you and Bruce taken a look at this space at all yet?
We do. Yeah, we are as well. There's going to be no shortage of opportunities and financings, especially from an investment perspective. We always have access to all the deal flow being on the institutional side. So yeah, we'll get presented a lot of new ideas in the coming weeks for sure. Well,
very cool. Keep us posted what you guys find out as you go. I'm sure we're going to be talking about this a lot more. What should we think about going into next week, Jordan?
Yeah, so we're still in the middle of earnings season, so we're going to pay close attention to that. The US LEI index, which comes out each month, reports on Thursday. The economic backdrop is definitely positive and constructive, so we're not really concerned about a recession being imminent or a bear market being imminent. So that hit an all-time high last month, so that's on Thursday. And the Global Climate Summit is wrapping up today as well. So we'll see what the aftermath is as a result of that next week. Because I know that there have been a couple ETF launches that have been carbon neutral focused. I know Purpose launched a couple ETFs, and I believe 9 Point has one that's going to be available shortly as well. So yeah, there's a lot of economic data on tape next week as well. So it'll be busy for sure.
Sounds great. Well, listen, I also just want to point out yesterday was Remembrance Day, November 11th. So just want to send out all of my thoughts to all the veterans in Canada and globally who have gone out there and put their lives at risk for us as a society. And, you know, it's interesting. My grandparents were in World War II. They met in World War II. And every year that you see the ceremonies that happen, there's less and less veterans. You know, time is passing quickly. But anyway, my thoughts are out to all of them and all of their families. Thank you again for joining me, Jordan. I look forward to seeing you next time.
Thanks for having me.